how Infosys reported healthy set of numbers for the first quarter. Revenue and profit came in higher than expectations, while EBIT and EBIT margin came in line with estimates. Meanwhile, the tech major raised the lower end of financial year 26 revenue guidance in constant currency terms to 1 to 3% from 0 to 3%. But as far as those numbers are concerned, my colleague Pulkit joins in with all the number crunching. Pulkit, very good evening. Over to you.
Infosys has released its quarter 1 earning, and it is really good. If we talk about revenue in USD terms, it is around 4.5% up. If we talk about in the INR terms, around 3.3% up. For EBIT margin, around 15 basis point down, and if we talk about PAT, it is around 1.6% down. If we closely look at the EBIT is around 2.65% up. If we talk about as per the estimations of ET Now poll, so for revenue, it is above our estimates. For EBIT, it is in line. For EBIT margin, it is also in line. And for profit after tax, it is above. If we talk about the total attrition, around 14.4%, and in last quarter, it was around 14.1%. If we talk about the total headcount, it is more or less flat, and all in all, the results are good.
All right, thank you, Pulkit, beg your pardon, for joining us with that. But let's also put into perspective how Sandeep Agarwal, fund manager, Sovilo Invest Manager, says that the Gen AI and agentic AI will be a major concern for IT companies, in fact, going forward, especially for the next 2 years. Why does he think so? Let's listen in.
No, so the only concern is that, this agentic AI and Gen AI, the problem is they have dented the effort substantially. Now, even if you increase the pricing or realization a bit, it cannot cover for the amount of effort which has gone down. So I think that is the real challenge the industry is facing. And I think, by the time Indian IT companies are able to have majority of their revenues from this new technology, it will be 6 to 8 quarters. And that's the reason I think next 2 years will be quite challenging from growth perspective for the large names. The advantage with mid and small is that, they are small in size, so their proportions can change much faster than the large ones. But again, there the multiples are even much higher than the large cap. So I think, this sector is bound to go through some time correction unless, there is again a risk of environment and people want to shift to defensive. Otherwise, right now, the situation as it is, it looks like, all the stocks are trading at quite expensive valuations given next 1 or 2 year outlook.